Hello and welcome to Business and Banking Dialogue, your one-stop show which brings to you day after day a topic of interest which is topical in nature. Today is no different, ladies and gentlemen. It's a new topic and a new subject matter expert. I'm your host KK and I'm bringing this show live across to you via EPS social media channels, YouTube, LinkedIn, Twitter, and Facebook. Once again, welcome to the Business and Banking Dialogue. Ladies and gentlemen, just a brief about the topic. Digital transformation has dramatically disrupted a number of businesses across horizontal and vertical markets, spanning both business to business, as we call it B2B, and business to consumer, B2C models. Both the models, it has created a major transformation. The telecom, healthcare, and financial services industries have seen adoption and significant changes as a result of digital transformation. But the insurance industry has not been able to draw into this transformational vortex. So there is some issue in this industry, and we would like to know why and how. To discuss on the topic of winning on insurance's new playing field, please join me in welcoming Bala Chandrasekaran. So Bala Chandrasekaran, I'll just give you a brief about him. You'll be able to see it on your screen itself. Bala Chandrasekaran is Chief Digital Officer at Marsh Asia, Singapore. He has an international experience of over 25 years in risk management and insurance consulting. He was also in JLT, Jardine Lloyd Thompson, for new product development and initiatives. He is also a faculty member at the Asian Risk Management Institute. He holds an engineering degree from IIS and has done his MBA from Singapore. Today, he's live with us from Singapore. Good evening, Bala, and welcome to the Business and Banking Dialogue.
Good evening, good afternoon, KK.
Pleasure to be with you guys. Thank you. Thank you very much. The pleasure is ours. I know it's evening for you there, and thank you for joining us. So how's Singapore doing with the slump in GDP and economic recovery, briefly?
I think just like any other country, right? I think it is going through probably a hard time. The only thing I would say the positive sign is on the COVID front. I think we're seeing dwindling numbers. So hopefully I think we should get back to shape fairly quickly. It's going to be a hard grind for the next 6 to 12 months. But, as you know, right, the fundamentals in Singapore are usually pretty good. So I think we always look forward to recovery in 12 to maybe 18 months.
Okay, great. Good to know that, I think most countries are on the verge of, restarting, rebooting, whatever we call it. So good to know about Singapore. I'm sure Singapore, with all its resilience, will be right on top. So Bala, being a Chief Digital Officer of Marsh Asia, you will be closely tracking the adoption of digital technologies in the insurance sector very clearly. What are the shifts you are seeing in the insurance sector, particularly the non-life insurance?
Sure. Great question, KK. To start off with, right, I think I work for Marsh, and Marsh is an intermediary, as you're aware. Okay. One advantage of being an intermediary is basically, if you look at the value chain, we probably sit somewhere right in the middle. We sort of have a vantage position looking at both the demand side as well as the supply side of how the whole industry plays out. Okay. I also look at things from not only from an insurance perspective, I also look at it from a risk management perspective. And we also look at insurance as primarily a lever. It's almost the lubricant, which makes the entire business cycle go smooth. Although, insurance is often seen as boring and unexciting. It's essentially the money which actually comes through from the insurance market is essentially the lubricant which absorbs most of the risk, making the whole, play possible in the industry. Okay, so I think most of my views are from that vantage position where I have a sense of what is going on the demand side as well as on the supply side. Okay, I actually look at this from two perspectives. One is what you see typically on the radar, what gets reported, what is on the press, what people read about quite often, which I call as the visible stuff, and which is typically what you sense from a customer experience point of view. And this most often happens in the B2C world, where you're on an online platform, you're buying some insurance on the back of that. Or probably on the B2B2E platform, where you're actually dealing with a business, and the business in turn actually, probably relates online to its either employees or to its own customers. So B2B2C or B2B2E. Okay. So now on that spectrum, right, most of the conversations are typically around health and wellness. Okay, and typically around motor, personal accident, and the likes, typically those kind of insurance. The biggest shift I sense is happening in what we call as the shared economy or the sharing economy. Where you are in the space of peer-to-peer lending, you're looking at freelance and gig economy workers. You've got people working in the delivery industry, the last mile delivery industry. And you're typically in the space of car rides and ride sharing apps and an app-based economy. There's also significant shift in the SME space, which is called the small and medium enterprises, where small and medium enterprises are actually buying insurance cover to de-risk their own business portfolio. Okay, now this is where they like to actually conduct their business on a digital platform, because what that would do is it takes some amount of friction and the cost away, and it also allows us basically to put out some products there which are easy to understand, which are easy to comprehend, and the underwriting requirements are do not have to be really complex. You could use proxy parameters to actually measure the risks, and you could actually put out a product which is effective, which can be bundled, and it can be delivered electronically. So that's what you could see typically on from the visible spectrum. What is typically below the radar, which you don't see, is typically on the B2B area. Now, these are largely related to emerging risks, risks which are still not understood very well. So risks which are typically in this space are largely related to risks coming on the back of drones, IoT, where you're actually got a better part of your business jigged up to the cloud on the back of IoT and sensors and stuff like that. Risk related to cyber, which is not well understood because they've not been understood well, they've not been modeled well, there's a scarcity of data there. So these are all what I call as emerging risks, basically. Okay, so when you talk about industry, there's real-time risk management, which typically happens now in the construction industry. You've got a construction site, they have a multitude of sensors now, which sort of gives you a sense of how the risk is evolving at real time. So in all these cases, basically, right, what you're doing is you're looking at risk from a future point of view or as it's evolving, rather than looking at the past. Traditionally, insurance is always done on the back of historical data. Okay, and you use that data to actually rate and provide a pricing, whereas now the whole dynamics is actually changing because we're getting into a connected world. Now the question is, how do you actually understand this? What do we need to do from an industry perspective to actually understand this in order to price these risks? And where do you go with these things? I think these are the two dynamics which I'm actually seeing in the industry. But fundamentally underlying all these things is a common set of themes which sort of emerge. The first theme is basically customer centricity. No matter what you do, I think the customer is the king now. There's deep customer centricity, and the customer experience is a seamless embedded experience. Okay, if you're actually selling insurance to them, it needs to be part of something else which they're actually doing. So if they're buying something online and they want an insurance to actually secure that or get some warranty on it, it needs to be a seamless experience. They don't want separate experiences for that because you then lose the audiences. Okay, so deeper personalization and customization. And these are typically what you see in areas where it's typically low touch. Okay, and you trade in volumes. See, the other change which I'm seeing, which is common, is that I think we are gradually shifting from product-based selling to a platform-based selling. Okay, so I think the shift is definitely on the platform. Okay, some of the things which are actually coming to market is dynamic pricing. Historically, insurance has been priced one, and the rates have changed, not so frequently. But on the back of the gig economy and the kind of data which is available at real time, I think you're looking at dynamic pricing. Now, this actually becomes very difficult for the incumbents, basically, right? The traditional IT platforms are not really evolved to actually take care of some of these dynamic pricing. So that's a change which we actually see. Then there's a huge shift within the insurance organization, the intermediaries and all, in terms of frictionless process. Basically, how do I bring in operational efficiencies? Can I use AI? Can I use chatbots? Can I use machine learning? Can I use OCR? How do I digitize some of these internal processes? So that's a huge change, which is actually going on. And most importantly, a fundamental emphasis on data. Okay? Traditionally, we've learned how to work with data and data warehouses. We collect all the data, we house them somewhere and then run on the basis. Technology is so evolved now that you could actually work with unstructured data. And the manner in which we manage this data, is very different. I think you can put them on in data lakes, and the technology now fundamentally allows you to actually work with them very differently. So I think these are all the shifts which we have to adjust with. And finally, in response to that question, right, there are a few business model changes which are also coming. On the back of all these changes which are actually coming in the connected world and the platform economy, I think many of the insurance is actually going into what I call as a narrow and deep. Okay, so you have companies like Trove, you have companies like Lemonade, you have companies like Metromile. We actually go into one segment of the insurance domain, okay, and then they execute end to end, and then they do a great job about it. So they go narrow and deep. But at the same time, you've got non-traditional players, integrating insurance as part of their value chain. One example I would give you is Tesla. Tesla is already looking at building its own insurance capability in-house. So on the back of manufacturing the car and right from selling it, they basically can, if they want, they can actually introduce the insurance as part of the value chain. So that kind of integration is also happening. You're probably aware of the biggest deal Amazon, Berkshire, and JP Morgan has on the healthcare segment.
Yes.
Where they're looking at the healthcare and trying to reform that entire chain in the US. Okay. Similarly, in Asia, I think you've seen deep integration of banks like DBS who work with insurance providers like Chubb, and then they sort of embed the insurance into their super app. So if you go onto a DPS app platform, I think there's a segment or there's an area where you can actually go into the app and then procure all your insurances, and it sort of provides for a seamless experience. So I think these are all the dynamics which fundamentally are happening in this space. So fundamentally, the idea is basically shifting from traditional risk approaches to dynamic risk approaches, and also actually looking at data holistically and essentially working on the back of customer centricity.
Yeah, but Bala, you mentioned about things like being customer centricity and customer experience and deeper personalizations and many other things, but these are typically for, if you look at banks, I mean, they also have they had the same problem, but I think now they are kind of coming out, have already come out with more digitalization, which perhaps insurance has not. And like you said, maybe insurance has been a slow starter there, perhaps they are moving into that area. One clarification, if you can give for our participants, you talked about product to platform-based selling. Can you just briefly tell us what is this change that you're looking at?
Well, essentially, right, earlier I would actually innovate on the product. So if I'm working with another competitor, I would probably have a slightly different product, which probably gives a broad form cover when compared to a competitor, probably on the price point or on some of the features. Okay, now what is happening essentially is that I'm actually shifting that to a platform where I am banking more on the experience which the customer gets in terms of interacting and buying, and how they feel about the whole product, how quickly they can buy the product, how they can handle the fulfillment process, rather than the product itself. The product themselves might actually be made a lot easier and simpler, but I've shifted the focus on the experience. So when I go in, the whole journey must be so seamless that I actually close that gap. And when I get out, I'm actually satisfied and I have a product. I understand the product very well.
Okay, thank you. there are a lot of bankers, and bankers will immediately know that there is something called as a fintech, which is like sometimes you can say they're threatening the banks. Sometimes you can say no, they are actually collaborating with the banks. So similarly, in insurance, you have InsurTech as it is coined now. Okay, so the entry of InsurTech, like fintech companies in banks, in insurance sector has changed the playing field. See, the InsurTech companies are continually expanding in scope, encompassing a variety of platform models operating at certain points or across the insurance value chain. How have the InsurTech companies changed the insurance industry? And according to you, which are the insurance fields are affected the most?
Yeah, that's an interesting question. I mean, the honest answer is InsurTech have actually, they've come in and sort of agitated the space, okay, in a positive sense. Okay? And I don't see much of a distinction between InsurTech and FinTech because a lot of what actually happens in the innovation space on the FinTech actually is an adjunct to the InsurTech space. So if you're talking about payments and financial transactions and overseas remittance and direct debits and transfer of credit, all those things are actually sort of adjunct. So they sort of go hand in hand because part of the fulfillment process for an insurance value chain rests with how the banking and the other financial industry works. I think, so two things are happening. One, the InsurTech, right? I think what they've done is they've brought substantial energy into this whole space, okay? And they come with a sort of what I call as a can-do attitude. And they're sort of forcing change on the incumbents, okay? One example I would give you is a typical employee benefits reimbursement claim process. I put a claim for something, goes through 22 handoffs, okay, from a process point of view. Now, if you could actually, make that whole experience on an app with some clever OCR and an AI, and with some integration with a payment system, these handoffs could probably be brought down to 3 or 4. Okay. Now, an InsurTech, right, has the wherewithal to actually experiment on this space from a position of safety. Okay, and once they actually do that, it sort of becomes a motivation for the entire industry and the incumbents to start looking, because it's now a threat. I have to respond to this, and changes which I've seen on the banks, the kind of technology rollout and the efficiency which are coming into the other segments have to eventually get into this space. So I have to start looking at it. So in that sense, it's both an opportunity as well as threat. By and large, I think the shift is more where players have started to sense that insurance tech is more of value add, and then I think we sort of have to embrace that and work with it. So if you look at the global InsurTech market, right, the kind of the investment which went in 2019 was about $5.48 billion. Okay, and it's expected to reach about 10 to $11 billion by 2025. And it's sort of growing at a compounded average growth rate of about 10 to 11%. That's significant. Okay, but then when you compare it to the size of the premiums in the market, right, we're talking about a huge market which is $4 to $5 billion. Okay, which is still in the traditional play. Okay, so it is a positive change, but it's still not significant in that sense. But people are all watching that space. If you take India in particular, 2019, I think about $180 to $200 million of investment has gone into the InsurTech space on the back of about 11 to 12 significant deal flows. Okay. What you observe from the InsurTech players is that they work across the entire value chain. But if you look at it, right, very few of them, they straddle the entire value chain. You'll find one player probably working in an AI space. You'll find one working only on a claim space. So if you look at the spectrum of typically presented in literature, you would see they're all over the place. So it actually becomes the onus on the organization adopting this to actually string them together and put them together in order to provide the end-to-end value addition. Otherwise, the InsurTech in itself, it's just only part of the puzzle. So I think that's how it's sort of evolving. And if you look at the InsurTech players, most of them are probably in the distribution or the marketplace. Okay, and what is happening here is, interestingly, the insurers have already created their own channels in response. Okay, so If you look at InsurTech, they come from the position of agility and technology, while the insurers, are actually coming from the strength of capital, and most importantly, they come from the strength of deep domain skills. Their understanding of the insurance market, the understanding of the regulators, the understanding of the dynamics are far deeply ingrained. Okay, and they also have deep pockets, and they have an existing commercial and a customer base to work with. So I think, so both these, one is coming from the left field, the other is coming from the right field. I think they probably have to converge somewhere, and that will eventually happen.
Okay, thank you. Like in banking, you have this word called FANG, Facebook and Apple and others coming in. Could you name some international and Indian insurtech companies, if it's possible?
Yeah, I mean, the international ones which are really, quoted a lot is Lemonade, of course. You must have heard of them.
Okay.
You've heard of Trove, Trove. You can look at an auto insurer called Metromile. So these are some of the players. Let me just project something I have.
So while you are getting that, this thing, has Amazon and others come into the play?
Yeah, Amazon has come into play. I think in India, they're already selling auto insurance on the back of the platform. But the major jig which Amazon is doing is the one which I mentioned on the back of JP Morgan and Berkshire in the US, where the whole intention was to disrupt the entire healthcare system there, basically, which is largely seen as inefficient in the US. And that can be seen as a significant threat. In our part of the world, right, I think there are multiple players who are actually getting into the space. You've got, in Singapore, for instance, we have Grab, which is basically like the Ola. Okay, on the back of that, they're coming up and starting to sell insurance. So anybody who has access and traction with a large customer base actually is slowly entering into the space. So in some sense, it's ripe for disruption in the B2C and low volume, high value business.
Okay.
Okay. If you look at some of the deals in can you see the screen?
Yep.
Okay. So this was put together by one of my young colleagues from India, Marsh Asia, Akash Agarwal. So if you look at some of the ones in the Indian spectrum or ACO, you've got Toffee, which is well mentioned. Digit is a good platform. Okay, there are a few who are also coming into play. Companies like iNew, Metamorphosis is someone which I'm closely following. Discovery is another entity which I'm closely following. So there's considerable traction where we have people who are actually coming into the space.
Okay, yeah. Nice, yeah, good to know. I thought, when we talk of InsurTech, the participants should know some of the names, and I'm sure they can now correlate that. So that's the reason why I asked you. Okay, you talked about disruptive technology, okay, and just now in this course of the last question. So where is the disruptive technology taking the insurance industry?
I think what is happening is basically, right, it is making a fundamental shift in how traditionally this whole game has been played out in the industry. So I think people are shifting places. The role of traditional insurers, the role of traditional intermediaries, the role of InsurTech providers, they're all sort of co-mingling into an ecosystem. Okay, as a result, what is eventually happening is basically there would be different business models which will come into play. Some of them will, some of the traditional insurers will actually change their business models. Some of the incumbents or the startups or the fintechs will probably get into the insurance space on the back of platforms. And the other shift you would see is non-traditional insurance players who are big businesses. They will actually come into this space when they get vertically integrated.
Okay. Thank you. So, ladies and gentlemen, I hope you are able to appreciate the industry of insurance. And transformation is happening there. It's not that it is untouched. But yeah, they have been slow starters into that. But but they are moving, and so seems to be a lot of opportunities for the fintech, as we call it in banking, and insurtech, as we call it for the insurance companies. They mean the same as technology companies. So, ladies and gentlemen, I look forward to your questions now. It's almost near to the half an hour mark. Put in your questions in the Q&A box, or you can ask a question directly to Bala. To answer or not, that is his prerogative. And so be free to ask any questions you want directly to him, or put it through the question box. I look forward to some interesting questions while I continue my discussion with Bala. So Bala, what are the hurdles to digital transformation in the insurance industry? What is your recommendation to the insurance companies in general to devise and implement a digital ecosystem strategy?
Okay, great question, and that's something which we all are trying to grapple with. I think to put it simply, right, technology is the least of the worries.
Yes.
Okay. I think running a true transformation program within a large entity is a significant challenge. So if I'm an insurer or a large intermediary, I think running a true transformation program which brings all our stakeholders within our own organization is the hardest part. Because I need to bring the IT, I need to bring the ops, I need to bring the business, I need to bring legal and the compliance team, all of them together in order to get onto this journey. Okay. So I think what we have been trying to do is, trying to win on a formula where the first port of call is we actually try to win hearts and minds. We convince our own people to actually go through the digital transformation journey. That's in the form of motivation, doing a nudge, education, and stuff like that. Once you've actually got this hurdle and you've got an amount of buy-in, I think what you do is, as I earlier said, right, you start winning on the back of products and platforms, which means that you need to be in a good position to learn how to actually execute on your IT and digital strategies. Finally, it comes down to execution. Anyone who can execute much better actually gets ahead of the curve. The technology, otherwise, is a level field. It's a question of how well you can absorb and adopt these technologies. And the most important, finally, is once you've actually done these two things, is to start winning on the back of data. As I said, right, the more data you have, it allows you to start doing things much more differently. You can look at new business models. You can look at alternate business models. You can gamify certain things. You can look into the future. You can do A/B testing. You can play with it. You can experiment. All these things are possible on the back of data. And if you don't have that, I think you will have significant challenges. The other thing which we need to do across the spectrum is learn how to work with sandboxes, where we are experimenting freely, in a sensible way. It's not that you go and run off and do anything as an experiment just to prove technology. That would be disastrous. I think we just need to do in such a way that it's completely aligned with your overall organizational objectives and strategies. But learning to work with sandboxes, learning to fail fast, learning from those mistakes. These are things which InsurTech typically tries to do because funding is limited. There's a lot of energy and enthusiasm, and you've not structured yourself so rigidly. So these things are changes. One of the takeaways I had, KK, honestly, was on the back of a concept of policy entrepreneurship, which one of your speakers, Mr. Sambamurthy, introduced a couple of days ago. Okay, I had not come across this, honestly. I think so. I think policy entrepreneurship, right, is largely done in the context of government or countries, where you have a policy. Okay, and there are three related P's there. So you have a policy entrepreneur, is essentially a change manager who looks at putting the rules of the game in terms of the policy. Okay, and then he basically then has to work with somebody managing the politics, where you actually bring all the stakeholders together. All right, so that's the second pillar on the back of that. And most importantly, you just need to know what your problem is, and then you need to know how to actually model and solve that problem. So I think one of the things or the models which we can adopt from that is basically even within the enterprises is to look at someone within the organization who's like a catalyst for transformation. Because you need to bring all your people together. You need to manage your organizational dynamics. You need to be very, very good at modeling your technology and the digital at the same time. And then it all needs to be anchored on a solid policy so that it can withstand all the, the positive and the negative aspect of how we actually want to grow the business. So that's one of the takeaways I had. And that's something I think we should probably look at. Organization can look at adopting. But otherwise, it goes to the same set of basics, KK. It goes down to people, process, and technology in that order.
Yes.
I think we need to bring people along. You make your process robust, cut out all the frills, and then you adopt technology at a rapid pace. Two things I would mention in the context of people. I think increasingly what needs to happen is you need to have cross-functional teams. So you need to have people coming from different domains. Having people from the financial industry or from public policy, having psychologists, having people, behavioral scientists working for your organization becomes more important right now, because you've actually shifted the whole spectrum, and now you're actually focusing on user experience and dynamics. So you really want to understand the psycho profile of your buyer, and how do you go through. So I think having cross-disciplinary teams, looking at diversity, looking at inclusiveness, that's something we're big at here in Marsh. And also, learning to work with people across geographies, that's very important. COVID is in some sense forced us to already do that.
Yeah.
We've been virtual and to a large extent, we've been very successful. But I think all these things we need to start imbibing in order to change the whole environment.
True, very true.
One aspect I really want to touch on is, this relates to the first question you asked. Banks have transformed, insurance has not transformed. Okay, I think one of the biggest say about insurance is it's still seen as a business that is solicited. Okay, and there's a great deal of trust deficit in the insurance industry. I think that trust deficit has to be breached. This is a global phenomenon, not necessarily with respect to India or anybody. The proof of the pudding when you actually buy insurance is when a claim is actually settled effectively within record time. So that trust deficit has to be breached, and then the onus is on the entire industry to do that.
Very true, absolutely, no doubt about it. My next question to you, Bala, is that the boundaries between industries are getting blurred with fintechs and insurtechs coming up. So you suddenly find that there are players, like you said, Amazon and Apple, and suddenly getting into things like they do trade finance, right? Or I take an example of a Chinese company called Ping An, which also one of our guests had mentioned, and we thought it was very interesting. So Ping An, a Chinese insurer, has expanded its offerings to include healthcare consultations, auto sales. Okay, healthcare consultations, auto sales, real estate listings, and banking services, all put in one. Okay, so really he is going beyond the silos of industries. Can you give more examples of how insurance companies are perhaps reimagining their business borders beyond the borders of their own industry?
Yeah, I mean, Ping An, to be honest, KK is slightly different. I don't see many insurers actually getting into other segments.
Okay.
What is happening though is, Ping An is one example. What is actually happening though is the other players who are actually encroaching onto the insurance segment. Okay. There are. I mean, just to name a few Chinese companies, right? You've got Tencent. Okay, yeah. They have access to WeChat. On the back of that, they have access to millions of customers. Okay, who are actually interacting on the platform. Now that actually becomes the central or the nodal point on the back of which they can actually, chain all the services which they want to do, and insurance happens to be one of them. Okay, so they can get into all the low-hanging fruits which they can actually sell through this digital channel, as long as the product is easy to understand and the fulfillment process can actually happen on the back of platform. You could actually deliver insurance on the platform. I think that's where the encroachment is happening. What is happening though is for the incumbents, what they can do is they can start working on areas, where it's seen largely value added. So a typical insurer you would see working with partners on in the motor car industry to embed safe driving tools, accident support in the case of an accident, real-time alert when there's an accident, providing maintenance services on the back of the auto contracts. If you're talking about health insurance, you're talking then about healthy living, diagnostic tools, reward for checkups like what you see in AIA, Vitality, and stuff like that. There are some insurers who get into financial planning, helping the client understand their own financial dynamics much better as part of the insurance offering. People who insure home from fire and things like that, they get into home security, fire protection and stuff like that. These are all almost like adjuncts to your core value proposition. I think that's the direction they're actually moving. Insurers are not largely straddling into other business. Even in case of Ping An, these are all seen as ancillary business, which are actually part of the entire conglomerate. Ping An has a good healthcare tech company, which they built on the back of all the AI called Good Doctor. This is seen as an adjunct. It's a separate business entity from within their entire portfolio. Okay. In Singapore, I can give you an example of an insurance company called Sing Life. It's one of the best insurtechs I actually know here. So Sing Life, basically what they have done is they've come out with an insurance savings plan. It feels like almost like a bank. So you put in your money there. For every dollar invested, 1.05% of that actually is given as an insurance cover to you. Okay. On top of that, if you're an individual, they provide you with retrenchment benefits. Okay. And then they give you a Visa debit card to transact it. It almost feels like the bank, but it's not a bank. Okay. So these are the areas they're actually trying to do, but these are just marginal shifts. I think by and large, insurers are sticking to their core value proposition.
Okay. So insurance, is pretty much within its own boundaries. Is insurance companies trying to get into something else besides the normal insurance things that they do?
Not really in my experience, KK.
Okay.
I think, as I said, right, they largely stick to value-added services. I think what instead is happening is, right, insurers might choose to go deep and narrow. If they're actually on multiple segments, they might actually confine and they move to specific segment, where they can increasingly, leverage on tech. They can do digital discovery and digital delivery, and then they might reduce their portfolios. The other alternative, what they can do is they can actually work on an MGA platform, which is called a managing general agent, where they sort of license a product to another company which acts as an agency which enhances their distribution. So that way, right, they leverage technology and resources available to the others, and the product comes from them. So these are the shift they essentially get into.
Okay. The insurance industry, like we said, is changing. Maybe it's changing slowly, but it is definitely changing. So as experts predict nearly perhaps 1/3 of existing insurance models will disappear within this decade. The fierce competition, new opportunities, and technologies like AI and top of all that, millennials are also changing their habits, right? Preferences, some up to the call for more flexible and customer-facing or customer-centric business models. So can you tell us what are the new emerging business models that are coming up? You did mention a couple of them. So if you could just touch upon some of them.
Yeah, there are a few, KK, which I can think of immediately. What I see essentially, there's a blurring of lines here, over the years. I think it's sort of going to coalesce over the next few years into some kind of an ecosystem. So I think to start off with, right, you have insurers who are probably investing most in fintech and insurtech. Because if you look at the chain, the reinsurers are typically at the back. They don't have direct access to the primary market. They're not in front of the customer. Okay, now the insurtech and the fintechs gives them a way and a path directly into the customer. So they're sort of getting into the secondary market directly on the back of the capital which they have. And so if you look at it, reinsurers are basically investing heavily into the insurtech market. So that's one dynamic and a shift is actually happening. The other, the shift is basically the availability of alternate capital providers. Insurers, reinsurers, and retrocessionists, typically they're the ones who actually provide capital in the market. But then you have alternate capital providers. You know, you have venture capitalists who are coming in wherever there's flush of fund and they have access to customers, right? And they can actually enter into that space. So that's one change that is actually happening. So the second thing is some of the insurers I said earlier, right? They might go narrow and deep. Okay, they might exit certain lines of business. They might become boutique insurers. So they might take some specialty lines. They might focus on energy. They might focus on special art. They might focus on a line they're really comfortable with, and then focus all their energies and really, you know, adjust their strategy to become very successful in that space. The third one I said is, you know, working through the conduits of managing general agents or managing general underwriters, where they actually give the pen to an agency. And the agency then works on the back of good tech and people and resources to distribute this. So you actually build the product, you provide the capital, the agency then sort of, it's like an outsource which actually manages and executes this whole thing. It's a lot easier than changing from inside. You know, you get access to the market quickly, you can grow rapidly. So that's one technique which is actually used. The other shift potentially which will happen is as better data actually emerges on the back of big data and stuff like that, the client themselves who are insuring big time, they might actually go into a self-insure or a captive mode. You know, they might start insuring their own stuff and accessing the market only for reinsurance or beyond. So they don't go to an insurer. So this has already been there in work for years, but on the back of better data and on the back of InsurTech, I think it will sort of give them the confidence to actually go on a self-insured mode. Okay. And then finally, I can think of big brokers like us. You know, I think we are in a space where we are close to risk consulting and also insurance broking as an intermediary. I think what we would do is we are going deep into industry knowledge and we turn into risk consultant, basically appreciating and understanding the dynamics of a client's industry, providing the advisory services around it, and then facilitating insurance solutions in the market. So it is going to be a play where we understand data very well. We work with all the partners in the ecosystem to aggregate information, provide a sense around the data. So analytics becomes very important. Brokers will start to understand and utilize AI, machine learning, and stuff like that fairly well. We work with one or two startups in India. There's one I work with called Engagely in particular, who've been helping us in the journey. So I think these are some of the dynamics which I actually see. And also, I mean, last but not the least, the insurers are actually, they're on the move. Okay, they're rapidly transforming their own tech. Almost all insurers have a digital transformation program. They go through a lot of internal transformation. They look at operational transformation within the organization, automating the process. So I think the insurers are also stepping up the game in terms of technology, their ability to deliver, the ability to partner with InsurTech and stuff like that. So the landscape is really changing. I mean, it's in a state of flux right now.
Okay. So Bala, I talked about participants asking questions. So I have one question to you. It's come from Twitter. It talks about the claim process. It says, why is it that the claim settlement takes such a long time, whereas for collecting premium, it's at a very brisk space? Why is it that though I have paid insurance for maybe 10 years, 15 years, why is it that the insurance company can't give me a settlement, at least a part settlement for the number of years of premium I paid immediately on lodging a claim?
Yeah, this is a trick question, KK. I think most insurers, right? My belief is that they make best efforts to basically respond to it and pay on time. And almost all of them are governed by proper KPIs, both internal as well as external KPIs. Okay. I think the challenge is essentially around the process. You know, it's still largely paper-based. You know, it's only off late that, you know, insurance claim can basically made online. But then, as I said earlier, right, on one of the claim process I worked on, there are 22 handoffs. And you fill a form, that form actually then goes in, and then you need to have somebody, typically a human being, who is then evaluating the form against the policy and making sure that all the rules and conditions are met. Okay, and then once that is done, basically there's another handoff where actually it goes for an approval process to say, okay, is this a valid claim or not a valid claim? Again, that's a manual handoff. Okay, then it goes into a payment process. Assuming it's approved, right, it goes into a payment process where somebody has to literally write out a check. Okay, now this is where I think automation can actually help. Now assume that your claim can actually be digitized, and you can actually click, and through OCR you can actually get the claim immediately sent across to the insurer. The insurer now can actually use AI, okay, to actually automate this process. And they can apply rules engine where 70 to 80% of the claims can be auto-adjudicated. You don't need a human being to start looking at it. As long as it meets some broad criteria of it being a valid claim, the machine can adjust, to say that, okay, this is a claim which can be adjudicated. And if it passed the initial smell test, you could actually send it out. And then you could then link it into a proper payment process, where you can actually do a direct transfer to the bank account. So that's the direction most insurers are actually going on. So I would rather fault the process, and as digitization and automation happens, right, I think this will get better.
Yeah. But I thought the question had a good suggestion that, if I paid premium for so many years, why don't you say that, moment you put a claim, I'll give you a part of it at least, so that they at least have some relief. And the balance, you can go through your process, because processes, each company will take their own time. Yeah. So I thought it's a good thing for you to.
Yeah, I think it does happen. You may not see this on normal consumer contracts, but on large industrial insurance, this is already baked in. These clauses and they're part of it. When you actually make a claim, it all is subject to the provision of how the contract is actually constructed. But this is where I actually went to the initial point, right? The overall trust deficit in the whole industry is something which collectively the industry has to appreciate. Okay, and the second thing is, the more closer you are to the customer, right, and you have a customer-centric, which is the shift happening, then these things are actually going to fall in place. Otherwise, you were always a silo sitting at the back, okay, and you were never directly sort of interacting with the customer. See, on an average, some statistics reveal, right, that over a 20-year period, traditional insurers might actually interact with the customer not more than 20 to 30 times. Okay. Now, if you're online on social media, this interaction is probably somewhere in the range of 7,500 to 8,000 impressions or exchanges in some form or the other. Okay, that's where we need to go, so that the interaction between the guy who's actually paid the premium and the insurer, or the intermediaries, or the facilitators in the space, right, can connect, and they understand each other and bridge this trust deficit.
Okay. Bala, I said that we could also get a question directly to you. So we have a direct question coming to you from Santosh Dash. Santosh, can you please unmute yourself and ask the question? Santosh? Okay, so maybe he has some difficulty. I request the digital back office to contact him and check if you would like to ask this question. Can we talk a little about the healthcare space and wellness space? We could look at that, and ideas around the policy stack, like the health stack, and corporate employee benefit space. Bala, what's happening in this space? Can you tell us what are the new things that are happening in this healthcare and wellness?
This is the most dynamic space going around now, KK, be it India or be it any part of the world. The employee benefits and the wellness space, especially on the back of COVID, right, has taken center seat. With more people working from home, both emotional well-being, mental well-being, physical well-being, all these things are something which has become very, very important for corporates. The focus is essentially shifting there. So, and again, the lubricant here is basically your employee benefit and healthcare insurance typically provided by corporates. Okay. So most of the digital delivery here, right, is done on the back of technology platform, because you try and reach out to the, what I call as the B2B2E segment. Okay. So insurers or intermediaries deal with a business. The business in turn has a captive audience of all their employees who are typically, for whom insurance is arranged. Okay. Now this sort of, allows you to create a market effect, a marketplace effect. Okay. As I said, right, one of the things you really want in this industry is more engagement. Okay. So you want users to come onto a platform where they can actually have a dialogue, okay, and they're actively interacting. Now, this is possible in this space because what you could do is you could roll out a number of wellness tools online through an app-based or a digital platform. That increases the level of engagement which you're having on the platform, okay, and then you can deliver a lot of adjunct wellness services on the back of that. So this sort of creates a network effect. You can create a marketplace where you're selling not only additional insurance, you can sell in banking products. You have a captive audience who are now interacting on the back of the platform. Essentially, right? And then I think you basically collect substantial amount of information, which the user can then tailor. And then you can have machines sitting behind to actually go through the process of looking at their own wellness, comparing themselves with peers, and the whole approach of it's almost like getting onto an online buying platform. So this is one space which is exciting. The key thing here, though, is this is closely related to any of the government's health schemes. So if you take India, right, you've got the government healthcare scheme, and if you really want to build anything which is largely an ecosystem play, including hospitals, pharma, drug companies, including insurers, and that kind of a play, right? I think then you're slowly nudging into the policy space. Where the health stack becomes very, very important. Okay. Unfortunately, if you looked at UPI, which is one of the biggest success stories in India, right? You put out a payment platform. There is a well-articulated policy. Okay, we're reaching out to millions and millions of people. The number of transaction throughput through those things are actually phenomenal. Okay, now if you really want to reach that kind of a scale, and you want to take healthcare into it, I think you need to start looking at the fundamentals on identity, authentication. How do you do all this process seamlessly, and then how do you connect people onto a payment where some of the benefits? The question one of the users raised was, how do I get claims paid immediately? So you've had, let's say, you've had a hospitalization, and you made a claim. You want that money to be transferred fairly quickly. Okay, so that a large portion of that depends on how effective the ecosystem becomes. And that's where, right, implementation of a health stack in the context of a nation actually becomes very important. I think this I think is going to be, if implemented properly, is going to be a great game changer, at least in the Indian market.
Okay, thank you. Let's look at Santosh Das. Santosh, are you in a position to unmute and ask the question? Santosh? Okay, unable to do. Okay, let's take a second question coming from Mr. Tripathi. Mr. Tripathi represents media. Mr. Tripathi, can you please go ahead and unmute and ask the question?
Good noon, Mr. Bala.
Yeah, hi, Mr. Tripathi.
I just wanted to ask you, insurance industry, how you people are coping with the impact of COVID. Do you people see any increase in the sale of health policies or COVID-specific policies? Obviously, it's natural, but what about the claim settlement? Do you also see that the claims are honored promptly? And it will be great if you can answer this question in Indian context and Asian context.
I can answer, Mr. Tripathi, the first part of it, where I'm not really 100% sure about the dynamics of what's going on in the from a claim settlement point of view from the Indian industry. But overall, I think from a healthcare policy buying and the adoption point of view, definitely I think the awareness is greatly increased. As you as you're aware, right, in societies like India and other societies like Vietnam and Indonesia and all that, the amount of penetration of some of these insurance is actually minimum. It isn't significant. In some economies, you rely on what is actually provided by the government, and there is a social safety net. But otherwise, the awareness is actually low. But thankfully, on the back of the COVID, that awareness is increased. And I think, to be honest, I think we are seeing an increased adoption and buying of insurance policies. I am not entirely sure, Mr. Tripathi, on how the claims experience is panning out in India. I could get some research done for you if you want.
Okay, thank you very much.
Thank you, Mr. Tripathi, and thank you, Bala. Bala, there was also this, if you have any, the IRDA, it is the Indian regulator, came out with, in July, they came out with what is called the creation of a pandemic risk pool, whereby the insurance regulator said that such a risk pool in future could offer protection for business interruption without material damage, loss of income and livelihood, and other related pandemic-related losses, which are currently not insured in India. I thought this is a great initiative. Of course, the light of it has to come because that's a committee has been formed. You see such moves also taking place in other places?
Yeah, I think, this is probably a good move in the Indian context, KK. Traditionally, what we see is large corporate insurers and clients usually actually have a good PI and property damage and combined general liability cover as part of the insurance they actually procure. The segment which probably is not well represented in that space is the SME. Okay, so I think probably this is a broad form suggestion by the Indian regulator, bringing many of these SMEs and others into that place so that adoption can happen, and then there's sufficient capacity in the market to actually, increase adoption of PI and policies on the back of pandemics and like COVID or the others.
Okay. So one point question that we have is why is digital transformation, since you are very much into digital transformation, why is digital transformation so tough? Simple question.
Yeah, the answer, it's a great question, honestly. I think that's something we grapple all the time. As I said, right, the digital transformation is not a technology problem. Okay, it is a process and it's a people challenge. It's a process problem. I think all organizations have an embedded manner and outlook of how they actually work. Okay. So adjusting your processes, adjusting the people's mindset, changing the dynamics, how you actually work in a very responsive manner, putting the customer in front of your conversation rather than having the siloed approach which we've had traditionally, where only a customer exec basically gets to know what's actually happening with the client, whereas the other part of the entity doesn't have any interaction whatsoever with a customer. So these are the challenges. I think most of the challenge is largely internal. Okay, and for a large, almost traditionally for hundreds of years, insurance has always been paper-based. Okay? So I think that's essentially the bottleneck. And slowly, as you start digitizing, this would have to change. Other industries actually took the cue and did that fairly quickly because there was a real pressing demand. Okay, that pressure is now actually slowly getting into the insurance industry as well. The simple answer is digital transformation is tough not because of technology. It's because we have to change mindset. We have to win heart and minds. We have to put customer at the center of things. And the popular idea these days is what is called as design thinking, where you actually start to empathize with your buyer, okay? And then you work on the back of that empathy to, in order to improve your entire customer service value proposition. I think that was lacking, and that shift is now happening, and things would change.
Okay, thank you. I have a question coming to you from Mr. Palani Swami. He says he's talking about the current, people coming in. That is, he says there are a lot of non-insurance players are coming into the insurance business that we have seen. his question is, how much domain knowledge and expertise is important in this new business model where non-insurance players are coming for insurance business?
Yeah, it's a great question. It's really a great question. Yeah, I think one of the things, my personal view is, right, I mean, you need deep domain understanding for insurance. Okay. The other thing is, insurance is a it's a heavily regulated industry.
Yes.
Okay. So the dynamics of working with regulators and governance and legal and compliance is actually significant. Okay. So understanding all those dynamics is actually very, very important. And if you understand insurance, right, it all depends on your contract. It's the legalese and the language which you use in the contract, which is very important. Okay, and understanding the language of how policies are constructed is very, very important. For that, you need to have deep domain expertise. If it's a simple, I mean, this applies even to simple products which you're actually selling on a consumer basis, but this becomes very important, especially on larger industrial kind of risk management contracts, where insurance is used as a solution. So deep domain is actually very, very important. I think what the incumbents have that. The traditional insurance players are really good at, because they know the inherent processes, they have deep domain skills, they have all the technical skills around insurance. But new players who actually get into this market, right, I think they come on the back of strength of either a good financial backing or access to customers or the technology to play in the market. And then what they do is actually they supplement by getting people with great amount of experience from traditional insurance players to partner and work with them.
Okay. Bala, just a couple of more questions. Hold you back for another 2-3 minutes, Max, if you're okay with that.
Yeah, sure.
Okay. So, insurance has always been about, when you say insurance, it's first thing that comes to your mind is brokers. Now that the InsurTech space is taken over by a lot of this tech companies, fintech companies, does it have an effect on insurance brokers? Will that remain as an industry?
Not really, KK. I think, see, I do the role of digital transformation, okay? And so, and I think we are ahead of the game in terms of adoption of technology, okay? So we understand this landscape, we understand the dynamics. While InsurTech the brokers are equally adept at absorbing this technology into their ecosystem and transforming themselves. So what I said in the context of insurers applies all equally in the context of insurers as well. In fact, the adoption and the ability for us to absorb technology and become most customer-centric is much more rapid for us. And I think we are quite ahead of the game there. I think in that sense, right, while we keep our eyes open about disruption, I think we are good in terms of knowing how to actually adjust to this and staying relevant at all times.
Okay. So my final question to you, Bala, is, to sum it up, going forward, what according to you are the top 3 mantras for the insurance industry going forward in this race?
I mean, it goes back always to the same set of things, KK. Customer centricity, okay?
Yes.
Looking at data in an absolutely new light, okay?
Yes.
Learning how to work with data, and then most importantly, learning how to work on an ecosystem, working with multiple partners across multiple geographies, and more inclusive in the sense of accommodating ecosystem players, bringing them all together and working using a partnership model rather than a silo model.
Excellent. Thank you, Bala, for coming. Ladies and gentlemen, I kind of wind up today's show. Just as a parting thought, I would say that today the emergence of a host of InsurTech startups like the fintechs, with many using emerging technologies such as artificial intelligence and Internet of Things, to offer deeper insights and greater speed and efficiency of services to meet the changing customer needs. And Bala talked about it. that the customer centricity is of extreme importance. In a recent study by Celent, the digital transformation of the insurance industry is in full swing as per that research organization. Therefore, digitization offers opportunities to improve performance and customer experience. And that's, I think, the mantra that the insurance industry will take it forward. We are bound to see a lot of transformation there. This pandemic is also creating a lot of demand. And so you will see a chance, you will see a transformation from a digital point of view. Your customer experiences will be far better with most of the insurance companies. With these words, I would request you to join me and thanking Bala for spending his a good evening that he would have had in Singapore. He has spent talking to us. So Bala, thank you very much for coming over and spending time with us and telling us all about insurance.
Thanks, KK, and appreciate all the audience for taking the time. If there are any specific questions, you could always reach out to me.
Yeah, sure.
Or any specifically around data or points around InsurTech, I'm more than happy to actually respond to your specific queries. Yeah.
That's nice of you. We will try to reach you out. So thank you very much, Bala. Ladies and gentlemen, I kind of draw close to the session. Tomorrow is we have an online session with Mr. Mrityunjay Mahapatra. He has come here, ex-SBI, ex-Syndicate Bank chairman. So that's a short video our digital boys have made. Could digital team, can you play that out?
A series of smart contracts and applications which are interacting in an intelligent and programmable way with each other could redefine banking and financial services as you know. This is known as decentralized finance. Join me on 14th August at 3 p.m. in Business Banking Dialogue to discuss and learn more about it.
Thank you and have a good evening. Thank you. Bye-bye. See you tomorrow.
Yes.
Bye-bye. Bye, Bala. Thank you.